Hello, at each equity, we analyze world's best brands for a core holding. You don't need to outsmart the market. Just avoid investing traps. I'm Jyotir. I've been investing in equity since 2007. Over the years, I've honed a strategy of placing my capital in leading global brands and businesses that are at a critical inflection point where the risk reward balance is tilted in investors' favor. One such story unfolding right now is this opportunity, which lets us take a position in some of the best designed to provide investors with exposure to publicly traded companies in the internet sector based in China. The price has corrected by 70 to 80% from its peak. The ETF holds 33 companies in its portfolio. The top 5 holdings of this ETF, based on its revenue and market cap, are given below. The top 5 holdings of this ETF is Tencent, Alibaba, Meituan, PDD, and Trip. This consists of 40% of its portfolio. Power of these brands. The brands which this ETF is holding. Tencent, it dominates social media and gaming. Alibaba is a major e-commerce player. Meituan, leading food delivery service. PDD, innovative social shopping model. Trip.com, leading online travel agency. The power of Tencent Holding is it owns WeChat, on which 1.3 billion users are there. Also, it's extensively working on AI activities. Alibaba, which holds brands like Taobao, Tmall, Alibaba. Taobao has 1 million users. Also, Alibaba is working extensively in AI models like Qwen2. Same with Meituan, which is a food delivery service with 700 million users. PDD Holding, Pinduoduo, which holds apps like Temu, 900 plus users. In Temu, they have 20 million users. Trip.com, which has 50 million users. Let's do a visual inspection. This ETF pays a dividend of 3.6%. It's trading at a price of $28. It has an asset of $5 billion. At its peak, it was almost around $100, now trading at $28.51. In this chart, we see that since 2014, this brand is trading at its lowest at the moment. Why KWeb is a good bet in your core portfolio? Market position and growth potential. Sector focus. KWeb targets a rapidly growing internet sector in China, which has shown resilience and potential for long-term growth. Revenue growth. The average revenue growth rate for these companies in KWeb are compared to those of many in US internet companies, despite trading at approximately 50% lower multiples compared to the US counterparts. Positive economic indicators. Monetary easing. The People Bank of China is easing monetary conditions with contrast sharply with high interest rate faced by developed economies. Government support. China government has set an ambitious GDP growth of around 5% for 2024, with internet giants playing a crucial role in achieving this goal. Recent performance and technical analysis. Bullish momentum. Analyst rating has improved to moderate buy. Valuation and investment strategies. Attractive valuations. Investment strategies. Investors can consider strategies such as dollar cost averaging. Stop holding and diversification, strong portfolio composition, diverse exposure, improving US China relationship. We have a strong voice of David Tepper and Howard Marks considering China as the top bets. Why to bet on China? Summary regarding the interest rate cuts and their implications, along with specific labor market conditions in China. There are key interest rate cuts in China. The mortgage rate had been reduced. Liquidity facilities, like a 500 billion RMB liquidity facility, has been established for non bank financial institutes, corporate buyback facilities, open ended monetary stimulus. There are certain policy delays. While monetary measures have actively been implemented, large scale physical interventions such as consumer vouchers are still pending. Physical headroom. With government debt around 60% of GDP and a 2% budget deficit, China has significant capacity for increased spending if needed. The labor market condition in China. Overall unemployment rate is 5%. Youth unemployment rate is 17%, and which is challenging. Urban unemployment rate is 5%. Average weekly hours worked is 48.9 hours. New urban job created is 12 million new jobs. Job creation in previous years is 12.44 million. Compare with other Chinese ETFs. Crane share AUM is 4.99 billion. Expense ratio is little higher compared to the others, zero point 0.7. 1 year performance is flattish. Dividend yield is better than all the other competitors. It's 3.63%, and its current price is $28.51. If you look at the graphs, you'll see that all the ETFs are languishing at the very bottom. They're almost flat on the floor. That means the entire economy, the Chinese economy, is struggling. I want to show you the exact methods and mental models that help me spot these growth engines, brands that could potentially multiply your investment several times over. If you're ready to take the step towards building multiple income streams through a world best inflection point businesses, stay tuned. The next stage of your wealth creation journey is around the corner. Let's harness the power of these proven brands, scale your portfolio, and watch these companies do the heavy lifting for you. The next brand which we're going to discuss is state of the art brand. Countries are fighting for it. Stay tuned and watch our channel. Thank you.